Steve Hunter wrote us by email. Too cheap to sell was the subject. Dear David, I've been a happy Stock Advisor member for many years. However, not every recommendation I've invested in has worked out, which is okay, of course. Steve kindly writes. He even kindly then goes on to talk about some of my biggest losers in recent years. But some, he writes, Seadrill, Westport, have so little value, really just a few $100s, that I wonder if it's foolish to sell them. That would be with a capital F, the good kind of foolish. Is it foolish to sell them even though I'm pessimistic about their future? There's a small but not zero chance they'll bounce back. If I sell, the money I can reinvest is small. Your thoughts? Well, Steve, thank you very much for writing. And, I have some big losers. I always will in my services in my own portfolio. And here's my general advice for big losers. At the point at which, if you're down with a stock 80% or more, and you've maintained a fairly balanced portfolio, then that position has simply shrunk relative to all the other positions in your portfolio. And you're right, it becomes almost a needless distraction to see something with a big red number in terms of its percentage drop, but a fairly small number in terms of the dollars you have invested at that point. That's why I think of those primarily as just tax decisions at the point at which you find yourself. Usually what I look to do is I look to sell that position unless I have a really strong confidence in that company going forward, and I match it up against another stock whose capital gains I'm cashing for whatever reason that year. So you can reduce your capital gains. You can use losers like that to reduce capital gains of winners as you redeploy that winning money somewhere else. So for me, they become a tax decision more than anything. And by the way, for some of these winners, they do come back, and that can be really good news for those of us who hold on. I think in general, whether it's my stock advisor losers or my rule breaker losers, I think it's fair to say that I tend to hold losers too long. But that's all in service of holding my winners too long as well. If you do the math, it's a good numerical fault to have, because your winners you hold too long, that is for a long time, are going to end up wiping out, in my experience, what you lose on your losers. And that's why I think of them more as a tax decision as opposed to something to get excited about or to reinvest in. I also finally want to admit that there's also a little psychic energy for all of us, which is just consumed by the presence of additional losers just sitting there on our scorecard. And so sometimes just cutting bait can be the psychologically healthy thing to do as well.
As always, people on this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. Learn more about rule breaker investing at rbi.fool.com.